Hello.
Hello, good morning, everybody, and welcome us to another exciting morning market review. On today, the 11th September 2024. So this is our morning market review. We do this every trading day. What we do is we analyze the market. We try to give you tips and tricks on how to navigate the market profitably. And we do this from 8 a.m. to 9 a.m. One solid hour of market analysis. It promises to be very exciting, guys. Once again, good morning. My name is Emmanuel. So let me do a little sound check here. Let me see whether you guys can hear me. Sound check, please. Can you guys hear me? Thank you. Thank you for your responses. Thank you. So as you can see on your screen, we call it make daily profit. I promises to be that, exactly that, right? So those of us joining us for the first time, what you want to do is sit still, relax, and follow up the analysis. What we try to do is we try to keep it relatively very easy, very, as in try to start from the scratch so that we are not giving you tons of information that you cannot simulate, okay? So we try to make it very easy for you so that you understand it. Those of us that have been joining us for some time now, thank you very much for tuning in again. It's going to be as exciting as it used to be. So what we try to do is we try to run through fundamental analysis first, then we now do technical analysis. So that means the market is largely governed by fundamentals and technicals. So these are the two areas you want to make sure you understand them properly, such that you're always coming out profitably on the market, okay? So one of the secrets of this market before we start is to always cut short your losses, right? I know as a new trader, you don't like that word loss. But in business or in this business, or if you like, in this industry, the industry is it's like every other businesses out there that runs on P&L. P&L means profit and loss, if you like, income and expenditure, just something like that. So how then do you come out profitably? Your P, I mean, your profit will always exceed or bigger than your L. That means the losses. So one of the key things or one of the key tool we normally use to cut short the losses is to always use our stop losses, right? So I want to believe those are trading with us for some time now. I want to believe you do use your stop loss, right? You do use stop loss on your trade. So trading without stop loss is not a good idea. So always make sure you use stop loss on your trade. Okay, guys. Having said that, let's jump right into the fundamental aspect of it. So as the name implies, fundamental. Fundamental is the main driver of the market or the main thing that moves the market, right? So fundamental covers macroeconomics data, right? That is responsible for the appreciation of the currencies or depreciation of the currency, that is responsible for the expansion of GDP or the expansion of the economy or the economy going into contraction, right? So those data are called macroeconomic data, and then we call them fundamentals here. So I'll share my screen right now, that we can look at some of the fundamental events for this week, and also the ones that have already played out Monday, Tuesday, and of course the one that will play out today, Wednesday, and of course Thursday, Friday. Okay. So let me share my screen with you right now. Guys, stay with me. So I've been able to share my screen with you guys. I want to believe you can see my screen. Now, there are several websites you can use for this fundamental, several websites. Now, one of the websites is what you're seeing right now on your screen. This particular website is called forexfactory.com. Those of you old-timers that have been with us, I'm sure we know this website very well. This website I use is now like 5 and 6. Now, but there are other websites, right? So let me show you other websites. So you can equally use investing.com. There's another website you can use. It's called investing.com. So this is investing.com. Now, it's very important that you know more than one website, right? Very important. It's not for sure. It's for you to navigate the news properly, okay? So there was a day I opened the first website, forexfactory.com, and I got the message that they are working on their website. Just imagine if that is the only website you have to trade with. Just imagine that. So there are other websites. So the second one is investing.com. This is investing.com. So as you can see, so these are some of the news events. So you can see this one, risk assets, right? Dollar drops, that means dollar that we trade after key US election debates, as you can see. So these are some of, most of this website gives you all of this. So most of this website gives you updates on what is actually affecting the currencies that we trade, right? Now, another website, let me just drop for you the third website, then I'll be done for this website. The third website you can use is called tradingeconomics.com. So this is another this is another website. It's called tradingeconomics.com. Right? So 3 websites I've dropped for you. There are so many of them, but for now, let's just stay with those 3, okay? So with these 3 websites, you can be able to navigate through their calendar. Each of them have what we call calendar, right? So this calendar shows you the itemized activity of events, right? Or if you like the news that we're expecting to rock the financial market. So these are the news, as you can see. Now, each of these websites have calendar, okay? So now let's just go straight to Forex Factory so that we don't stay long on this. Remember, we are doing fundamental, and of course, we also would do technical analysis. So I'm back to this one. So this is Wednesday, as you can see, September 11th, as you can see there. So this is the news activity for today. Now I'm doing this way because I think there are some newbies always joining us so that they can also get value, okay? They can get value. So this is the website. Once you open this particular website, look at the name up there, top left, forexfactory.com, okay? So our attention is usually on the impact. So look up here, you see the word impact. Impact means volatility, right? So volatility is the rate of change of price with time. So in a simple word, in a layman understanding, it is how much the price would move. Right? And it is that movement that culminates into our profitability. It is a movement of price that culminates into profitability of traders, right? So traders were always looking out for the news that have high impact. So long story cut short, the red flags here are the high volatility, if you like high impact. So this is high volatility for today, as you can see. What time was that? That was by 7 a.m. And of course, that was GDP. Month on month. So okay, this particular news has already been released. As you can see, their GDP, the GDP in the UK dropped. As you can see, it is on 0.0%. The forecast was that it was going to increase to 0.2%, but guess what? It did not increase. it's at 0.0%. So that's why it's red. So this alone is a sign of weakness for the domestic currency, which is the pound. Now, dropping lower, we have CPI. As you can see, we have CPI for today. So, guys, this CPI is going to really rock the market for today, guys. This CPI is one news that you want to trade and, of course, trade very well, okay? Now, please don't sleep on this one. Don't sleep on this CPI, okay? Set your alarm, call your friends, call your family, put more money into your account, guys, such that if you have been trading the news with 0.05, if you put more money to your account, increase your trading power, you can now start trading with perhaps 0.1. If you have been trading with 0.1 news, you can now increase it to start trading with 0.5, right? And of course, that is how trading goes. Okay, so you increase you increase the money in your account, then you can increase your lot size, right? If you don't have more money to increase your trading power, you can just trade with the amount you have there. Okay, but you know, if you have 100,000 naira and you traded and you made a profit of 10%, 10% is just 10,000 naira, right? That's because you traded with a smaller size because the capital actually or the equity actually was small, right? 100K. But guess what? If that same 100K you made a profit of let's say 50%, 50% is 50,000 naira, right? But guess what? If you had increased your capital base to let's say perhaps 500K, right? I made 50%. 50% is 250,000 naira. And usually during news events, most traders we do make a profit ranging from 10% to around 50%, depending on how much you increase your volume, right? So take note, during trading news event, especially high volatility news like this, the kind of profit you should target, you can make as much as 10% of your capital, right? Depending on your lot size, up to 50% of your capital, right? Now, guess what? Most traders, they make even up to 100%. But I wouldn't advise that, right? I wouldn't advise that. Just target between 10% to maybe 50%. So that will actually inform you the kind of lot size you want to use. Very important. If you have a capital of, let's say, as small as 100K, making 10K on any news event is a very, very cheap and very easy thing to do, okay? Just a small movement, you've already seen that 10K, guys. So, this CPI, guys, most person would like to predict the direction the CPI will go, right? Like to predict. If you look at the economy, you may want to predict the CPI may be bad for the dollar. But most of those predictions, they are actually what they are. They are predictions, right? They're actually what they are. They are predictions. But for me, I am interested in making money, guys. I'm interested in making money. So I think you may want to use the straddle method, right? You may want to use the straddle method. So the straddle method works best when the news moves forcefully in one direction, right? When the news moves forcefully in one direction. But if it moves in both directions is actually not both directions at the same time. It's good to understand that. Now it will move down, then turn and move up. That moving down might be like up to 30 pips or even 20 pips downward. Then before it turns and move up. So it's not actually down up or it is not actually very fast movement down and up immediately. No, it will move down like what we saw during NFP. It will move down, then maybe it will get to a particular point, then before it will not turn and then move up. But guess what? With your straddle method, if it moves down, you can, even if the result is for the news to move up, right? But if it's a mix, if it is mixed, right? For example, this one might also be mixed, right? Because this is CPI month on month. This is called CPI, and of course, this is CPI yearly, right? So if eventually it is mixed, it might move down, then of course it can turn and then move up, right? But then if you're using straddle method, If it moves down and hit your take profit, then you're already out in good profits, right? You're already out in good profit. Now, but then if it moves down, then did not hit to take profit, they move up, then of course you will need to also add stop loss to your straddle technique. Now, I've mentioned straddle technique, straddle technique simply. Now, let's forget about that word straddle. It simply means, you place a buy stop, right, before the news, and you also place a sell stop before the news, okay? I want to believe most of us already knows how to do it. But let me check the comment section right now. If you don't know how to do it, I can help you. But if all of us will already know how to do it, I'll just move on, okay? So let me hear from you. If you already know how to trade it that way, then fine and good, we'll just continue. But if you don't know how to do the straddle method, please get to this comment section, let me know so that I can explain that. I'll just wait for like 5 seconds. So Oluwaseun, I can see you there. You said so. I'll just, it's not just only one person. Thomas. So Joy FX. Okay, I think I've gotten up to 3 or 4 person. Okay, fine. The number is increasing. Thank you very much. So let me run through that real quick, right? Because that one too might take most of our time. So let me run through it real quick. Let me share my screen. I've gotten your messages. Let me share my screen so that I can show you how you can quickly use that straddle method. Then I'm not just showing you the straddle method. I'm also showing you the things you need to be aware of while using the straddle method. The straddle method may not really be 100% accurate, but I can bet you it is more than 50% accurate, right? And guess what? If you're making profit more than 50% of the time, then you are a good trader. So that means you can use this straddle method and be making profit on the market. Let me repeat myself. The straddle method is not 100%, right? Of course, there is no strategy that is 100% on this market. But I can assure you, it's more than 50% profitable, right? Then if it's more than 50%, so I can give you an exact percentage. It is between 60 to 80%, right? Between that range, depending on how best you know how to use it, right? And then explore the techniques around it. So between 60 to 80%, and guess what, sir? If you're doing well between 60 to 80% of the time, you are doing well. You're doing well. So look at the straddle method. Most persons, they will just use that small 20% of the time that the straddle method did not go well. They'll just conclude that it doesn't work. Come on, guys. I normally use the straddle method and make good profit. So one of them is just what I want to show you right now. So this particular, I want to believe you can see my screen, right? Now, this, if you look carefully, you notice. What's happening? If you look carefully, you will notice. You can see my screen, right? You can see. Let me check again whether you can see the screen. Yes, you can see the screen. So you can see my screen, right? For those of us that said I should teach you, I should show you. So look carefully on this screen. You will notice this is 15th May, right? You can see the screen. This is 15th May. So this is actually the CPI for 15th May, right? It's not just any random picture. No, this is CPI for 15th May, right? Some few months ago, right? So let me show you how the straddle method traded this particular news. So the news was by 1:30 as usual. So this is the that looks like before the 1:30, right? So straddle method is very simple. Just like I've said earlier, straddle method is not 100%, but I can tell you it's certainly above 50% profitability. No, let me say it's above 50%. And guess what? You're doing well. You're doing well. So let me continue. You can hear me. So this is how the chart will look like before the 130. So let's say a few minutes for the 130. That may just be 10 minutes or even 5 minutes or even 15 minutes to 130. Let's just say 120. So you come to your chart. What you do is this is the market price. You set a sell stop. You also set the take profit. You set a buy stop. You also set the take profit. Right? You set a sell stop. You set the take profit. You set a buy stop. You set the take profit. Now, for those of you that you are always it's always hitting both the buy and the sell. Now you may as well add a stop loss, right? So that means the stop loss for this buy may just be here, right, to protect yourself. The stop loss for this sell may just be at the same point. Okay, so you may just want to do that. Okay, now, but the idea of using this strategy method is we want this market to move in one direction. Now, but guess what? If your pending orders are too close to the market price, guess what? When the news is released, the spread usually opens up a little bit. And if it opens up a little bit, the ask price will pick your buy. The bid price will pick your sell. You don't want to be in that ditch. I'm telling you, be in that position. So that is why you give a good distance, right? A good pips distance from the market price to the sell stop and from the market price to the buy stop. I don't know if I'm communicating, guys. So you give that good distance. That distance should be minimum 10 pips, right? That distance should be minimum 10 pips. Minimum 10 pips. Now, it can be 10 pips, 15 pips, or even 12 pips, right? Now, that distance should be minimum 10 pips, right? Now, guess what, sir? Now, let me tell you why most traders don't do well using straddle methods. So most persons complain, it did not work. No. You did not follow it through. See, just imagine. Just imagine after setting this by 120, right? And the news is by 130. Do you think this market price will remain at the same position from 120 to 130? Let me ask you. Please engage me this morning on the chat. Follow me through. Now, you may drop your question much later, but just follow up my explanation, please. Do you think this market price will remain at the same position from 120 to 130? Thank you. I can see you there. Mills, Emmanuel Mills, Jeffta, Peter. Thank you. No. The answer is no. So that is why, or that is where most traders don't profit, or they're not profitable using the straddle method. Guess what, sir? From that 120 to 130, that's enough time for the market price to keep moving. Now, it will keep moving towards the buy stop, or it will keep moving down towards the sell stop. Like, for example, if you look at this my own very well, you will notice this gap and this gap are not the same thing. That means it has moved up towards the buy. So as it's moving up, your job is to constantly make sure that the gap remains around the same 10, 12 to 15 pips. So that means your job is to constantly, you keep adjusting the buy stop. So that means if the price is getting closer to the buy stop, you keep adjusting it. If it's getting closer to the sell stop, you keep adjusting it. Now your job is to be adjusting it. I can tell you that. See, from that 120 to 130, you have a job to be doing. You know? It's not something you just sit and go and sleep. No. If not, sir, do you know you can set this thing this way, and then it can trigger your trade. It can trigger your buy stop even before the news is released. And you don't want to be in that position. You don't want it to trigger any of the buy stop or the sell stop before the news is released. So one thing you want to do is, as the market is moving, your primary job is to keep adjusting it. Now, guess what, sir? If this news move and trigger the buy stop or the sell stop, you have missed out. So I think I've done enough explanation there. Then once the news is released, something like this, let me show you quickly. Once the news is released, something like this, if you notice, look carefully. This is the CPI of May, right? The same CPI on the US dollar, right? Of May. So if you watch carefully, it moved down a little bit before up. As you can see, this movement, right? So if this sell stop was much closer, guess what, sir? Your guess is as good as mine. Should have picked your sell stop, then move up to pick the buy, then of course put you in a edging position. And in that case, you will not make profit. But in this case, you just move up, trigger the buy stop, then you can move to your trade or just move or close your trade at it. So guys, ask me a few questions on this straddle method before you start asking general questions. If there's no question, we'll move straight to technical analysis. So your question, Mr. Sunday, I can see you there. Say, how should I calculate? This is your question. Mills, your hands are raised up. You can drop your question now. How should I calculate 10 pips with my phone? Okay, if you're doing if you're doing this with the laptop, you have more advantage, right? You have more advantage, right? Because you'll be using what we call one click trading, right? One click. You'll be using what we call one click. One click simply means you just click on the buy stop, you adjust to a new position, it remains there automatically, right? Then of course you can use your cursor here, right? This crosshair, you click from a point A, drag to a point B, you can tell the number of pips. But if you're using phone, then of course you really need to know how to calculate 10 pips, right? For example, one of the example would be 1 point. Let me give you an example so that you can be able to figure it out even on your phone. I'm still answering you, Mr. Sunday Ayim. So one of the things you need to do is, or the things you need to know is, you look at your phone. If the market price is at 1.20510, now take note of what I'm saying, because you cannot click and drag on your phone. So if the market price is at 1.20510, right, then a 10 pips distance, right, would be a buy stop of 1.20. Remember the market price at 5.1, right? So if you add 10 to 5.1, it becomes 6.1. So 1.20610. I hope you're following. So that's just how you have to know it. That now by just looking at your chart, you can be able to tell that 1.20610 is 10 pips away from 1.20510. I hope you understand that, Mr. Ayim. That's for you. Where should I place the stop loss, sir? Very simple. Place the stop loss. You can place the stop loss at the exact position. Now for your buy stop, you can place the stop loss at the exact position of your sell stop, right? Such that, you know, if you're not making profit, then of course you're not losing much, right? Of course, that is one of the secret of stop loss, small losses, right? Now, of course, that also depends on your, it also depends on your loss size, okay? So you say, what about the case of slippage? You cannot really do much about slippage because that you cannot control on the market. But slippage doesn't happen always now. It doesn't happen always. So slippage simply means the market can push your buy stop a little bit further before it picks your trade, right? So that means it's not really picking your trade at the exact point. But then if the market is still going in your direction, it will still pick it. Now, what slippage may just do is that slippage may just reduce the amount of profit you are targeting. So let's say you're targeting a profit of, let's say, 40 pips or 30 pips. Slippage might just move it a little bit, maybe reduce to maybe 35 pips or maybe 30 pips. So what's the best time frame? Man, time is really running fast. So guys, so that we can switch over to technical analysis. So Mr. Mills, your hands are raised up. Please drop your message. I'm reading a lot of messages here, okay? So in case of what's the best time frame to use for this method? The best time frame to use for this method, you may just want to use the highest time frame you should consider, because in trading news, what we actually do, we scalp the news. So we don't, in quote, necessarily trade the news, in quote. What we do is we scalp the news. So in that scalping mentality, the highest time frame you may want to use is 15 minutes time frame. So otherwise, you use 15 minutes or you use 5 minutes, right? Now, you may also drop down to 1 minute. So if you are an old timer, you may want to use one minute. But if you're a new trader, stay with 15 minutes and of course 5 minutes. So in cases where now we may just be reading all of these messages and before you know it's already 9. If it is 9, we shut down. So let me just take maybe 1 or 2, then I'll be done. So don't get angry if I not read your own message, please, so that I can do technical analysis. I love market structure analysis, guys. I want to teach you how the market breaks structure, how the market respects structure, how the market goes for liquidity, how the market go for stop hunt. All of that will be covered in technical analysis, guys. But let me just take 2 or 3 questions. You guys are still up in more questions. It's still good, but then I'll read it much later. But if I did not cover all of the questions right now, guys, you can ask the question maybe tomorrow, another session with you guys. Or you can even ask your account officer. You can ask me later, okay? On WhatsApp. So what's the best time frame to use for this method? Okay, I've answered that. In case where the 2 trigger, what is the way? Now, if the 2 of the 3 trigger, and of course you have stop loss, then of course stop loss will help you out, okay? Now, one of them will close in profit, the other will close in stop loss. At the end of the day, you may just be in what we call break even, right? Now, but if you're not having stop losses and the 2 of the 3 trigger, now you may just want to calm yourself down. Now, if the 2 trade trigger and then there is no stop loss, that is what we call edging. So the trade is perfectly edged. That's if you use the same lot size for the buy stop and the sell stop. The trade is now perfectly edged. If the trade is now perfectly edged, it means just leave the trade, all right, during the news period, 10 minutes after the news, 20 minutes after the news, just leave it, right? Leave it. Then you now want to do what we call market structure analysis. You analyze the market again and tell if the market is on an upward trend or a downward trend. So if the market is actually on an upward trend, right? So what you want to do is you may just want to wait until the market decreases a little bit to the sell stop or the negative on the sell. Then you close the sell on 0 or near 0. Then of course the buy will still be on negative, right? Then of course it's on an upward trend. You close the sell first. You close the sell first on 0 or near 0 because the market has retraced on an upward trend. And of course, because it's an upward trend, when the market start moving upward now, then of course the losses on the buy will now start reducing, right? Reducing until everything is gone. So, guys, I think so, guys, I'll come back for these questions. Let's switch over to technical analysis, right? So as you can see, we are switching over to the next phase. So guys, welcome once again. For those of us who are joining us, I can see the number have increased. So this is our money markets review. If you're just joining us, if you're new here. So we do this Monday, Tuesday, Wednesday, Thursday, Friday, 8 a.m. to 9 a.m. My name is Emmanuel. We are done with fundamental analysis. So the next analysis we want to switch over to is called technical analysis. But as a trader, don't get used to only technical analysis. Also fall in love with fundamental analysis. I mean, always check the website for news events, and that will help you. That will help you, okay? Now, every day, right? Make it as a custom to open this website called Forex Factory. Open Forex Factory, check what the news is telling you. And of course, this is news event for today. And of course, we just explain what CPI. CPI is Consumer Price Index. It's a measure of inflation in the US, and that can affect their domestic currency. Now, if the value here is higher than the forecast, it's good for the currency. If it is lower than the forecast, it's bad for the currency. I think that is the long and short of CPI. So, guys, let me switch over to technical analysis right now. So, let me switch over to the chart. So, somebody want to ask, but Emmanuel, what is the big difference between fundamental and technical? So what I normally explain, or what I normally do is, my explanation goes like this. Fundamental analysis have no respect for technical analysis. That's the first thing, right? So you may want to guess. That means somebody will say, ah, but Emmanuel, does it mean technical analysis have respect for fundamental analysis? The answer is, oh, yes, right? But fundamentals have no respect for technical analysis. Now, it's just like rainfall, and a very good example would be rainfall have no respect for your skin color. So whatever is your skin color, whether you're black, you're white, you're yellow, it falls on your roof. So what I'm trying to explain is that fundamentals sets the pace, right? Tells you where the currency is heading towards, right? For example, the US dollar is a very good example. So the US dollar has been falling for some time because all of the fundamentals around the dollar has been showing that the US dollar is weak, right? Let me show you this example. So some few months ago, the dollar was somewhere around 1.7, 1.5, as you can see, right? So see what I'm talking about, right? In June, the dollar was somewhere around, did I say 1.7? I mean 107, 105. So in June, the dollar was somewhere around 105, right? That is the personal strength of the dollar. We call it the dollar index, right? Dollar index. Or if you like, the USD index. So it was somewhere around 105. Now, all of the fundamentals, the CPIs, right? All of the news event, the PPI, the CPE, right? CPE, PCE, personal consumption expenditure, right? So we have CPI, we have PCE, personal consumption expenditure, we have PPI. So all of those news events, retail sales, right? From that time till now, all of them, most of them, they have been coming out as bad for the dollar. So because of that, we have seen some significant drop in the strength of the dollar, and this is a drop. So fundamental analysis tells you where the main strength of the currency is heading towards. And of course, with technical analysis, you can accurately time your entry. With technical analysis, you can tell the direction of the market, I mean the trend. Then of course, you can accurately time your entry, right? Your entries for a buy should be on a support. Your entry for a sell should be at a resistance. So with technical analysis, you can accurately time your entry. So let's look at that now. Let me drop down to H4 time frame, and then we can tell the strength or the direction of the market, right? We can tell the direction of the market. So I think this drawing, we had this drawing the other day, as you can see. So this kind of analysis is called market structure analysis. So that means we try to look at the structure the market is painting or building, right? We try to look at the structure. For example, what do I mean by structure? The structures are usually characterized by the highs and the lows. So when you hear the word structure, focus on the highs and the lows. So where are the highs? This is a high, this is a low. This is a high, this is a low. This is okay, fine. So that is the structure. Now, for a downward structure, if like a downward trend, the market keep trading or keep moving below the lows. So that means the market creates a low. The next time it trades below that low. So we call that a downward structure. The market creates a low again. The next time it trades below that low, we call that a downward structure, right? Like for the first time, the market is trading above the high. As you can see, it has already traded above the high. So that means structurally speaking, right, we are seeing some strength infused into the dollar because we have seen the dollar traded above the highs, right? Now, the dollar trading above the high, we call that a shift. So we have seen a shift on the H4 time frame. So the market have actually shifted to the upside on the H4 time frame. That shift is first a weakness for the downward structure, or if you like the downward trend, then of course a strength, right, for the upward trend, right? Now, after that shift, we saw that it traded above this high. It did a little retracement, which is healthy, right? Which is healthy. Now, that little retracement left us with a very big week here. So this week here is actually a very big market rejection. So the market have rejected the downward movement, right? So that means actually around this area, institutional traders are having their buys, right? So that means it's a rejection. Now, if this price retraces a little bit towards this area, it will still be rejected again because we have huge buy orders lying around this area. So it should still retrace a little bit more. But guess what? Our main target is actually this high. Remember, after breaking this structure to the upside, we call that the break of structure, we have formed this high. So the main target is the market to trade above this high. It tried that the first time, it could not, right? See the first time it tried that. It was going up to trade above this high. See where it stopped. It stopped there. It could not trade above this high, right? So, but then the target is for it to trade above this high. Trading above this high is a sign of momentum to the upside, right? Momentum to the upside. So, of course, but we are already seeing some level of strength, right? Because of this big week here. So, therefore, the strength is somewhere in both ways, right? Somewhere in both ways. But remember, this analysis is done on the H4 time frame, right? So we'll drop down to 1 hour time frame to give us more insight on what is happening. So on H1 time frame, now dropping down from one time frame to another time frame, we got. So dropping down from one time frame to another time frame is what we call top-down analysis. And then it is very, very profitable because it's very, very good because you are riding from one time frame to another time frame. You are seeing what different categories of traders on the market are looking at, right? You're looking at what the swing traders are looking at. You're looking at what the day traders are looking at, the intraday traders are looking at, the scalpers are looking at. So that will help you to accurately time your entry, okay? To help you to accurately time your entry, okay? So guys, still on the US dollar, this is a H1 time frame, and the difference is not really much. It's not really looking far different from what we saw on the H4 time frame, right? So we are still looking at this level, right? Being a rejection level, right? Being a rejection level. So let me go to Euro USD. Let's start our analysis from Euro USD. But from what we saw there, the strength is 50% or 50% down from the chart. So let me look at Euro USD. Euro USD on the H4 time frame should be able to tell us what the trend looks like. So we'll start from what the trend looks like. So by the time we understand what the trend looks like, then we should be able to navigate successfully, should be able to navigate very well to whether we are to trade it going up or trade it going down, okay? Now, from what Euro USD looks like, as you can see, we dropped down from this level to this level. Then, of course, there was a little retracement up there. So this is the first thing you want to do whenever you want to trade. You want to tell yourself, what is the trend? What am I saying? So we dropped down to this level, right? Then, of course, we did a little retracement again up here. Then we'll drop down again. Now, I'm just trying to draw for you. I'm trying to identify for you the highs and the lows, okay? Then we'll retrace a little bit down here. As you can see, the market is trying to do an impulsive movement to the upside, right? Impulsive movement to the upside. Now, this on the H4 time frame. Let me drop down to 15 minutes or even 1 hour time frame for us. Let's see what it looks like. So trading above this high, it means the market is about taking the market to the upside. The market is about moving to the upside, right? So if you notice, we have actually punctured this high, right? Remember, the market trading above this high is a sign of strength to the upside. So we're already seeing some level of strength to the upside, right? And if you watch carefully, we have already punched above this high. So if the market trade above that high like that, but failed to close above the high. So watch carefully. We have traded above this high, but if you notice, we did not close above the high. So if the market did not close above the high, it could be that it is only tapping the liquidity that is resting above this high. So because some level of liquidity is resting above this high, right? So we want to see the market trade above this high and close above the high. So that's the kind of strength we are looking for. Trade above the high and close above the high. Then we'll be going for a buy. But if the market is not closing above this high, we're not going for a buy. So you may want to write it down. Once you see Euro USD on the H1 time frame, close above this high. I think that high, let me give you the price of that high. That high, so that you can equally use it on your phone. That high is at 1.10491. 1.10491. So if the market on the H1 time frame for today successfully closed above the high, that high is 1.10491. There is a sign, it's a very big sign. It's a very big sign that we may just continue pushing to the upside. Otherwise, the market may just start trading to the downside, right? Because remember, if we have a wick above a high and did not successfully close above the high, it means it may just be tapping the liquidity that is resting above this high, as you can see, right? So what we want to see is we want to see this candlestick close above this high. Otherwise, then we'll look out for a downward opportunity. Look out for a downward opportunity for today. So what are we going to call downward opportunity or downward or a sell opportunity for today? Now remember, this is CH1 time frame. If you drop down to a lower time frame, that will be 15 minutes time frame, you should be able to see the market start trading to the downside. I mean, the first time the market breaks structures to the downside, it retraces a little bit upward, then you want to start selling. Let me show you that. On the 15 minutes time frame, this analysis, once again, is called structural analysis. By that, we are looking at the market, the highs and the lows. Now, the sell opportunity will come in the first time the market trade below the low, right? The first time the market trade below the low, and of course, that is when you may want to start selling, okay? So if not, you wait for the market to close above the high on H1 time frame. So this is the low, right? And of course, this is the retracement to the upside. So the first time this market, if the market trade below this low, right? Trade below this low, then I may want to start selling. Trade below. Now, trading below that low is simply an aggressive entry, right? An aggressive entry. Now, what if you trade below this low and trade below this low? Sir, you may want to place a sell. So on your 15 minutes time frame, once you see the market trade below this low and also trade below this low, it's a very good sign that the downward force is, or the downward momentum is in force. So you may want to start placing your sell, right? Otherwise, if it closes above the high, then you take. Now it means if you are to place a sell trade anywhere trading below this low and trading below this low, then your stop loss. Just a minute, let me take water, please. Wow, man. So then your stop loss, if you're selling for today, your stop loss will have to be above this side. But remember, guys, we have CPI for today. So if you place if you enter this trade, it means the CPI may just now you don't have to rush to close your trade if you have an existing trade already. And of course, the CPI is going to affect it. You don't have to rush to close your trade because of the CPI. No, except you want to use the straddle method. If you're already on profit, you may want to now close your trade and use the straddle method, right? But if you're not on profit, don't rush to close your negative trade because of the CPI. Because you may just be closing a negative trade, then the CPI may just actually move that trade in your direction, reduce all of the negatives, right? And start giving you profit. Then, of course, you've already closed your trade in loss. You don't want to do that. You don't want to do that, right? So bearing in mind there is CPI for today, the time is by 1:30, right? So if you're placing a trade, make sure you have stop loss. So if you're entering the sell because of the market have traded below this low and also traded below this low, now, but among the two, the strongest low is this low. Now, among these two low, the strongest low is this low. Remember, there are different levels of low, right? low prices, but the strongest level is this one, right? The reason is this first one, if I'm to use my Fibonacci, this first one should be around maybe just let me show you, around 38.2, right? Am I correct? It's not even up to 38%, right? So that's why this first one is not the strong one. This second one is around 62, 61.8%, right? So this is how to know which low is a strong low or a weak low. Okay, without much ado, let's leave that one. Let's not make it more difficult, right? But among these two lows, sir, this one is a stronger low. This one is a weaker low. Now, also, I have my 50 period moving average here. You'll notice 50 period moving average is a dynamic support, right? So before the market gets to this low, it must have conquered this low. So if you're placing a sell, your take profit will be somewhere at this low. So your take profit will be here, right? Your take profit will be down here. Now, of course, your stop loss will be the high I gave you earlier that I said on the H1 time frame. So, guys, let's see if I think this analysis is a detailed one, right? So the rest analysis, I'll just run through it. Now you have been able to understand the way I analyze, right? So you can copy this analysis and, of course, paste across USD JPY, USD CAD, US 100. Now let me do GPUSD real quick. Now it's the same kind of analysis I want to do. It's not something new. It's the same kind of analysis. It's called market structure analysis, right? So we want to start looking at the structure first. Now, guys, I've switched over to GBP USD. Now, on this Euro USD, you may want to do a buy stop. Sorry, a sell stop here or a sell stop here, right? You understand that? Now, on GBP USD, remember, I have to start as my custom is, right? I have to start from H4 time frame, guys. H4 time frame, this H4 time frame. So let me look at what the trend is telling me. Sometimes you try to measure the trend and the trend is not really clear. If the trend is not clear on the H4 time frame or on your choice time frame, you switch over to another time frame, perhaps it will be clearer there. Perhaps it will be clearer there. So one of the things you want to do is you look at one time frame, right? If what you are analyzing there is not clear, sir, you switch over to another time frame now. If it's not clear there, you switch again. Just keep switching. So at the end of the day, you get something clear, right? You get something clear. So look at what I'm doing. Impulse to the downside, retracement to the upside, another impulsive move to the downside. Now look at this change of character or market structure shift to the upside. Now this is another impulsive move to the downside, traded above this low, traded below that low. Then another impulsive move to the upside again. There, so what we have here is what we call a relatively equal highs, right? Relatively equal highs there. Then of course, I'll drop down to H1 time frame, guys. H1 time frame. Let's look at what it looks like. So we have a rare. By rare, I mean REH. Relatively equal high. REH. So if you hear the word rare, I'm talking about REH. Relatively equal high. I mean, this high is relatively equal to this high. Now, do you know, even if we extend this thing a little bit further, you can see this high relative to this high, relative to this high. So whenever the market has relatively highs like that, it normally serves as a magnet, right? Because liquidity will not be resting above the highs. By liquidity resting above the highs, I mean stop losses are also part of liquidity. I mean, that's so most times you may just want to start trading or start selling when the market tap through those stop losses. You quickly place your sell, and of course, if the market comes down, you're already in profit. Because once you understand the concept of liquidity, the market goes for liquidity. The market is not necessarily going for you. No, the market goes for liquidity. The liquidity is simply money. Where the money are hidden, right? Where the market knows that traders are hiding their money, and that would be at the stop losses, at the take profits, at the buy stop, the sell stop, the penny orders. Okay. Now I think you understand this. Let me remove it. So, so pardon me, I'm trying to be fast here because I think we spent enough time, took enough questions on the fundamental analysis, right? So if you watch carefully, this high was able to trade above this high, but it actually also closed above this high. It closed above this high. So that's a sign of strength to the upside, right? So if you are seeing strength to the upside, I may not want to rush it immediately, right? So the market, because right now, what I'm saying right now, remember the market is supreme. I mean, the chart is supreme. So the market is actually trading lower right now. If you look at it carefully, it has actually traded below my 50 period moving average, right? It is trading right now below this black moving average right now. The candlestick is trading below it, right? So I'll drop down to 15 minutes time frame. With that 15 minutes time frame, I should be able to tell you whether to buy or to sell or to wait, because waiting is trading. So guys, look here carefully. I have this strategy that I have a video on it, and of course that strategy is called MACD Pulse. I'm already seeing it playing out right here. So this is MACD combined with the moving averages and of course market structure. So I call that MACD Pulse. So this is the market trading to the upside. Then this is actually a retracement to the downside. So you will call this an upward trend, right? Because this high is higher than this high. This low is also higher than this low. Now, if I'm to include this other lows, I'll do something like this. As you can see, right? I'll do something like this, right? It's making more sense, right? So this is actually an upward movement. I mean, these highs are higher, but I think we have seen the market first time traded below this low to form a new low, right? So the market has actually traded below this low to form a new low. The market trading below this low, right, to form a new low it will mean the market have shifted to the downside, right? And guess what? Right now, is the market below my 50 period moving average? Yes. The MACD, is MACD trying to confirm it? Yes. So we are seeing a lot of signs that the market is about to go down. Trading for what it is simply taking risks, right? So we are already seeing signs of the market going downward, right? So you may want to now take a sell, right? So that's a sell there. Then, of course, your stop loss will have to be above the high. Now, this particular strategy is called MACD, right? Combined with the structural analysis, right? Break of structure, MACD box. MACD BOS, break of structure, right? So your stop loss will have to be above the recent high. This is the recent high. And of course, your take profits, having known your stop loss, your take profit will have to be times one of that distance, if you like, times two of that distance, right? So let me, so your take profit will have to be this low, right? This low, this low. So why do you take a sell trade? We took a sell trade. Why? Because on this lower time frame, we have seen the market trading below this low, right? 15 minutes time frame. Remember, this strategy is scalping strategy, or if you like, an intraday strategy, right? Because we have just cited that the market have traded below this low, right? So that is a weakness, right? A weakness, a short-term weakness, right? So we're trying to take advantage of that. Your stop loss too can still be above this high because it's a very short trade. Okay. So guys, I think let me do gold. A lot of question, a lot of so sir, can we say break of structure is the same as shift in structure? Break of structure is market actually trading above the highs or below a low. That's what we call break of structure. Now, if that break of structure is in line with the trend, It's just break of structure. But if it is against the trend, it's a shift, right? I think that's for you, Mr. Chinedu. If that break of structure, if market trading below the low or above the highs is in line with the trend, then that's just a break of structure. But if the market doing that is against the trend, I mean, it is not in line with the trend. I mean, the trend is downward, but the market now pulls structure to the upside. Then we call that a shift, right? Now, so let's just go. Let's do good very quick. So go there. We'll start with the H4 time frame, guys. H4 time frame on gold. So on the H4 time frame, guys, what can we see? Gold has been stalled, right? The market has been preventing gold from breaking above this particular level. Okay, H4 time frame, fine and good. So look at this level. Gold has been struggling to trade above these highs, right? So what can we say above the high? The high is actually a strong high. So this is one of the ways you can know strong highs and weak highs. So the market trying to trade above these highs, see the first time, see the second time, see the third time, see the fourth time, see the fifth time, see the sixth time, see the seventh time. This is the eighth time. The market is struggling to trade above the highs. Now, but then if you have a buy trade, if you have a buy trade and that buy trade is on profit, fine and good. Because the market is always trying to trade above this high, trade above that. Now, one thing you have to know is that it's a strong high, but that strong high can be debated. The reason why I say it can be debated is that in this market, the more the market is struggling or it testing a particular level, right? The more traders that are holding that level, right, will be running away. I mean, traders that are holding that level will be feeling like, this thing will certainly break it. This thing wants to break it. So the traders that are holding that level, right? Most of them will be closing their trade. Remember, this level is being held by money, right? Traders placing their trade here. I mean, those that are selling, right? Those that are selling gold around this level, right? So the more the price is coming around this level, the more they'll be afraid. So the more the market is testing this level, the more that strong level is getting weakened. And that's one information you have to know. So as you can see carefully, gold has built for itself what we call a range, right? So the market does not only trend, the market also goes into a range. So this is a range. So range means the market is not trading between two prices, right? This is the upper range price. The upper range somewhere around 2528. From 2528 to around this price, 24. So the market is a range between 25 and 24, right? 25 and 24. So as long as the market is in the range, you can be trading inside the range. So if you watch, the market has only been doing something like this, as you can see. The market has only been doing something like this, right? The market has been in the range now, and do you know you can identify a range very, very early, as early as the first touch, the first four touch. So this is a touch, the 1, 2, 3. 1, 2, 3 is enough to identify a range, right? You can just draw it and extend it into the future. So as you can see, it did all of this at this top, it came down to this bottom range, right? Then it went up to this up range. It was there for the first and second time, it came down to this down range. So the market, the gold is actually on a range, right? Now, this range is actually on the H4 time frame. So let's do H1 time frame so that we can get more detail. So we are still seeing the range, right? Because it is just 4 candles that makes up the H4 time frame. 4 candles of the H1 makes up. So the information is still clear. It's still the same thing. So that means we are actually rocking a resistance right now. If you're rocking a resistance, you don't want to buy. So one of the things you don't want to do, right? Because trading involves what to do and what not to do. So if you're rocking a resistance, you don't want to buy, right? You don't want to buy. You don't want to buy. You only buy if that resistance is broken, and that resistance is actually a strong one, right? You don't want to buy. So what do you want to do? You want to look for opportunities to sell, right? But guess what? There is a news for today. That news, if that news is bad for the dollar, the CPI or this chart will use that particular news as a catalyst to break through this level. So this level is at risk, right? This level is actually at risk because of that news. Okay, so that news might just break through this level and of course start trading higher. So on a 15 minutes time frame, we should be able to see what the market is actually going to do. So on the 15 minutes time frame, you agree with me, this trend is actually upward trend, right? So we would like to do a sell. We would like to do a sell and place our stop loss just above this level, just in case we are wrong. A tight stop loss. Just in case we are wrong, our stop loss will be above this level. But the sell is not coming in immediately. Remember what we always do? The market must first break structures to the downside before we start selling. I mean, the market will show us that, hey, I've started going down. That's what I mean. So this is the low we got before this high, right? Now we got another low, right? This is a low, a small one, then before this high. So the market must first break through this structure, right, before we start selling. But if you drop down to 5 minutes time frame, you can see that on 5 minutes time frame, this also is another structure. Let me show you 5 minutes. So on 5 minutes time frame, so this is actually a structure, right? Now, this is for those that would like to scalp gold. Scalping gold means you want to make very tiny profit and also tiny stop losses, right? So this is a low. So this is the last low we saw before we took out this high to form a new high, okay? So this is the low. So the market, before you want to sell and put your stop loss just above this resistance, the market should have to trade below this low. This movement downward is not enough. The market should trade below this low, something like this. A little retracement to the upside so that you can have a very, very good stop loss. Then you place your sell here, then your stop loss above this level. But for now, we have CPI, and that CPI may just rock and take us through this strong resistance. So guys, it's already 11 minutes. I don't think we can do this US 100, please. I don't think we can do this US 100. Oh, because it's already 9 minutes, 11 minutes past 9. So guys, thank you very much. So let me drop my number. The number is for WhatsApp. You can also call 26264507. Emmanuel, most of you had questions that I did not take. Sorry about that. You can still ask me the question on WhatsApp, or you can call me. Emmanuel Dogu, guys. I'm signing out. Please join us tomorrow again for another exciting session. Bye for now, guys. Joy FS, I have my phone number there. Thank you.